There is a common misperception out there. Investors think that risk-controlled strategies can only work when the market declines. When the market increases, why bother, many investors think. The truth is, for most people, risk-controlled strategies take a little bit more effort. The purpose of this webinar, however, is to prove that extra work pays off. We are going to talk about our swing trading strategy today. We're going to talk about its longer-term performance versus the market. We're going to talk about what it did in 2008 when the market collapsed. And we're also going to talk about what it's done over the last year while the market has surged. And we're going to compare performance over time. Before I do that, however, I want to reiterate something. There is a reason that we are engaged in risk-controlled proactive strategies. And that reason is defined by the investment rate. In order to find it, just log into Stock Traders Daily, go to the Economy tab and the investment rate. This is our proprietary macroeconomic model. It has defined every major longer-term economic and stock market cycle in U.S. history, and it has never been wrong. In the next few days, through the nightly newsletters that I publish for clients of Stock Traders Daily, I am going to detail the current findings of the investment rate and reiterate what it says about the future. If you are not yet a client, simply go to Stock Traders Daily and register. And then you too, over the next few days, will get those same updates. The investment rate explains why we engage in proactive trading strategies, why we are not buy and hold investors. But the purpose of this webinar is not to discuss the reason per se, but instead the actual performance of proactive trading strategies. And our focus is the swing trading strategy offered by Stock Traders Daily. So it's very important to understand that our swing trading strategy has incorporated risk controls. It is a rule-based, disciplined strategy that trades the NASDAQ and NASDAQ-based ETFs exclusively. It is never actually short, but it does participate on the downside by buying short-based ETFs. This makes it okay for IRA accounts. It is also important to understand that the rules and disciplines associated with this strategy are exactly what make it work. And when those rules are compromised, the strategy does not do what it is designed to do. Therefore, just like in most rule-based strategies, the rules associated with this strategy are important. You can read those in the tutorial. I would also suggest that you look at the mode variant chart. And when you do, you will learn exactly what the rules associated with this strategy are. This presentation is not designed to talk about these rules and these modes. Instead, this presentation is designed to talk about performance. And by performance, I'm not talking about just during the good times. I am talking about performance during the bad times as well. Let's start with the alpha and the beta. The beta is actually slightly negative for this strategy. The alpha, pretty much even with what you would expect from the market. This is an uncorrelated strategy, but a strategy that you will see has actually beaten the market handily. Let's talk about some of the raw data. Since inception, the swing trading strategy offered by Stock Traders Daily is up about 114%. During that same time, the stock market itself, the S&P 500, is up only about 56%. Here are our quarterly averages. Q1, on average since we started, has done about 6.21%. Q2, 6.59%. Q3, 5.11%. And Q4 has been our weakest quarter at 1.59% average annual returns. We also break this down by month, VAMI, of course, and the other details that you would need to do a proper evaluation. Please go through that raw data as you research this swing trading strategy so that you understand exactly what to expect. At least so that you understand exactly what it has done in the past. With this raw data, you will be able to evaluate and compare the swing trading strategy versus the S&P 500 with precision. But I think what you see here will be a compelling reason to give it consideration as well. Compare it to the S&P 500 since its inception. It started in October of 2008, by the way. And since then, the swing trading strategy, this blue line here, has significantly outperformed the S&P 500. Significantly. This is important to recognize. Yes, the S&P 500 has done well, but the swing trading strategy has done better. In fact, the S&P 500 has done exceptional over the past year. Everyone's talking about it. The market's doing nothing but going up and up and up. Yet, the swing trading strategy is again outperforming the market. Over the past year, the swing trading strategy offered by Stock Traders Daily is up about 25%, and the market itself, the S&P 500, over that same time frame, is up a little more than 11%. This proves something. This proves that this proactive risk-controlled strategy has outperformed the market even when the market increased aggressively. This is very important to recognize because it dispels that misconception. Risk-controlled proactive trading strategies can work when the market increases as well. But the kicker comes in when the market declines. That's when they really shine. So let's take a look at that next. To take a look at what this has done during a down market environment, let's go back and look at the performance over time. Notice here that the S&P 500 found its bottom somewhere near March, the early part of March 2009. So let's change our end date to March, let's call it March 9th, 2009. This is a down period in the market. The S&P 500 was down by about 24-25% during this time frame. But our swing trading strategy was up about 22%. In fact, it was up more than that at one point. But it ended up 22% during this particular down market environment. This proves something else. This proves that proactive risk-controlled strategies can significantly outperform the market when markets decline. Now, overall, the swing trading strategy has also outperformed the S&P 500. But it's important to look at those times when the market has done exceptionally well and when the market has done poorly, so that we have a firm understanding of what risk-controlled strategies can do in those market environments as well. Another thing interesting happens, though, when we pull back those layers like we have. We start to understand that it really doesn't matter when we engage in these risk-controlled proactive strategies. We could start using them at any time, regardless of where the market's at, because these are capable of making money in both directions. That's the beauty of it. I mean, all of a sudden, the noise, the news, the headlines, the market direction risk, should I get in or get out? All of those things that really clutter the minds of investors, the emotions that go along with those are dispelled. It just doesn't matter when you're using a strategy that can work in both directions, like the swing trading strategy offered on Stock Traders Daily. I encourage you to have a close look at this. Review the tutorial and the modes. If you're not a registered member, register and have a look at this. See these significant periods of outperformance. Learn why the strategy works. But most importantly, learn how you can start using it to your advantage. We've been doing this for a long time. These proactive strategies are effective and they work. And in my opinion, the only reason you or anyone else is not using them is because they have made an excuse or created a reason why they can't. There are no excuses. If you don't have the time, we can help you. By the way, that's the only relevant excuse. If you don't have the time, we can help you. Otherwise, adopting a strategy like this is a no-brainer, especially when the market is at these historic highs. Thank you for your time, and have a wonderful day.